Good evening, friends. Welcome to my YouTube channel. The company which we are going to discuss today is a small cap multi-bagger company, and this has given handsome returns in long term investment. This company is related to manufacturing of iron, aluminium, cement, and glass, all of which has a wide range of end use applications. There is one thing which is common to all these industries. That thing is it's manufacturing, that is furnace. Not going much into the detail of metallurgy, just having an overview about the furnace. Furnace, the picture shown above depicts the furnace. Furnace is the place where melting or heating process takes place in a controlled environment in the manufacturing of all these like iron, aluminium, copper, cement, etc. The picture shows the design of the furnace, in which there is this layer of brick. This brick layer is called refractory layer. Generally the temperature, this is the hot medium where burning or high heat medium happens. This brick layer acts as an insulation between the hot medium and the wall of the vessel. So this is called refractory medium. This refractory serve as a thermal barrier between a hot medium and the wall of the vessel. It withstands all the physical stresses and thus preventing the erosion of the walls of the vessel. Generally it acts as a thermal insulation between the medium and the environment. So it is good to say that no functioning of furnace is possible without this refractive medium. And these refractory bricks, refractory medium is made up of certain materials, and those materials must be resistant to decomposition by heat and pressure. It should be stable at high temperature, because temperature in the furnace will be more than 1000 degrees Celsius, and in that hot medium the refractive material should be stable enough to resist chemical and physical attack. So these refractories are essential in our modern world. For example, for all these items, steel, cement, copper, aluminium, glass, etc., to manufacture all these we have seen that we need furnace, and in that furnace it is refractory is an essential requirement. For example, steel is used in construction of houses, etc., bridges, all construction works, and copper is used in cables, wires, electrification, etc. Aluminium is used in wide range of products such as vehicles, automobiles, electrification, towers, etc. Cement for construction, concrete, etc. And glass, its own wide use of applications. So we can very well say that in this modern world, these are the basic items. To manufacture all these, definitely refractory is required. So with this background, we can conclude that for any growth of GDP of any country, these core industries are essential, and to produce these items of these core industries, furnace is needed, and in any furnace refractory is very much essential. So we can very well say that India's growth is refractory intensive. It is dependent on this refractory, and today we are going to discuss the fundamental and technical analysis of a company which is a market leader in manufacturing the refractory materials. That is why, friends, what I am trying to say is, whether iron sector grows well, or aluminium industry grows well, or copper grows well, whatever the core manufacturing business grows well, but despite any of the industry, our refractory is very much needed. So it is kind of proxy investing, and the company which manufactures these refractory materials is RHI Magnesita. So here are the refractory applications. Globally, of all the refractory items which are produced, 70% is utilized in steel manufacturing, 10% in cement manufacturing, 7% in non-ferrous like aluminium and copper, 7% in glass manufacturing, and 6% in chemicals. So these are the furnaces or smelters, the inner portion which these are the refractory materials. So, and these refractory materials has fixed lifetime and cost, which has so once this lifetime is over, these refractories has to be replaced. So there is two means in which RSI Magnesita earns its revenue. One thing is whenever a new plant is established, the furnace has to be established and the heat mechanism of the furnace needs refractories. For a new furnace, it earns revenue, and after its lifetime is over, the same refractories needs to be replaced. So these are the two mechanisms. One thing is for the new furnace, and second thing is for the replacement of the old refractories. So this is the general process in which a refractory is made. First, there are three stages. First stage is raw material production, in which refractory materials are mined, then crushed, and then it is heated, fired, and then it is pressed. And after pressing, it enters the refractory production is the second stage. After pressing, it undergoes heat treatment. After heat treatment, it goes to the third stage, where the refractory bricks are installed in this furnace. This furnace can be of anything: iron, copper, cement, etc. And after installation, the heat medium starts functioning, and there is regular monitoring and repair of this refractories. So once its lifetime is over, depending on the industry, the refractories are removed and replaced. The old or used refractories are sent for recycling, and in this stage the used refractories are sent to again refractory production and recycle. This is why RHI Magnesita is, we can say it to be very environment friendly in nature, because generally refractory business itself is an high emission centric business. Lot of carbon dioxide is emitted, and for if there is recycling done, it increases the efficiency and it reduces the emissions. Significance of RHI Magnesita. RHI Magnesita in 2021, Orient Refractories, RHI India and RHI Clasil, the three companies got amalgamated into one company in India called RHI Magnesita India. And in 2023, it acquired two companies. One is Dalmia OCL Limited and second is High Tech Chemicals Limited. So this is just a brief history about amalgamation and acquisition. This RHI Magnesita is an Indian working company of the global group called RHI Magnesita. So significance of RHI Magnesita. There are four very fundamental points in which it is very important to study the company. First thing is, it is a global market leader. As I already said, RHI Magnesita is a Indian player of the global player RHI Magnesita. So globally, this company occupies 15% of market share, whereas general refractory business itself is a very fragmented business. The rest of the market players have very limited market share, whereas RHI Magnesita alone has 15% of market share. And apart from that, in India, of all the refractory business market share, RHI Magnesita India owns 30% of market share in India. Second thing is, I would consider this as the moat of the company. RHI Magnesita company goes with long-term contracts with the clients of any industry like iron, cement, copper, etc. These longer contracts with clients to supply high quality refractory solution, due to which there is higher client retention, and as new clients keep on adding along with old clients being retained, the company gains its market share and thus profits and margins. So because of these contracts, the company is increasing its market share as well as profitability. There is client retention and longer contract time, and then high profits and margins. And this refractory business is high entry barrier business. So what is the advantage of the client? For the client, as for client, refractory is an expenditure that is, it has to incur for the functioning of its furnace. But due to this contract, that they get timely delivery of quality refractory, so there is reduced downtime. And because of good quality refractory being supplied by RHI Magnesita, there is lesser and lesser there is low frequency in which it has to be replaced. Hence, the cost of replacement of the refractory is low, which means the input cost is low. And because of quality of the refractory is good, the energy used in smelting or melting is less, and raw materials as in the bauxite or iron ore consumption is less. I mean to say efficiency is more. The third thing is it is backed by RHI Magnesita Group. Since it has access to high capital, so it can go for organic and inorganic growth by multiple acquisitions, etc. And it has access to technology and R&D. And fourth important thing of RHI Magnesita company is its sustainability. As I already discussed in the manufacturing process of a refractory, it uses a technology to utilize the recycled refractory material and then again to bring into the second stage, that is a refractory production stage. So by this mechanism, for every ton of recycled refractory, it represents 2 tons of carbon dioxide which is avoided. So these are the four important things. It is a market leader. It has a long-term contracts with clients. It is backed by the parent RHI Magnesita Group, and it is towards sustainability. So friends, these are the general overview of the company. Now let us discuss about the fundamentals and the technical analysis of this company, why it is a good investment option. So this is a small cap company with 15,000 crore market cap, but the you can say that the return on equity and return on capital employed is lower. It is less than 20 percentage, but since it is capital intensive industry, for all capital intensive industry, generally ROE and ROCE is always less, but still it is a good number. 14-15% is a good number. And the stock P, the valuation you might consider to be bit expensive, but it is a bit misleading in nature. I'll tell when we discuss the quarterly results. The P of the stock got abruptly increased because of the provisioning due to amalgamation, due to two new acquisitions. And apart from that, the current market price is approximately 750 760 rupees, and EPS is negative due to the same reason. Because of recent acquisition of two company had to keep nearly 600 crores in loss account due to the requirement of its provisioning. And the debt is 1500 crores, cash and is 326 crores, and debt to equity is 0.55. This is good because though being a very high capital intensive industry, the debt to equity is less than 1. So this is the long term chart of the company. This is the price chart. You can see this is a very good momentum stock. The price is continuously in upward trend, though there are corrections at multiple times. So this price chart is very good and decent enough, and the chart shown below is EPS and P by E chart. We can see that recently the EPS blocks are falling down. This is also a bit misleading, as I told already. Because of two new acquisitions, the company has shown loss for its provisioning for acquisition. Hence the EPS has fallen. Because EPS has fallen, there is a sharp shoot in P by E ratio, and hence valuation seems to be high. But this is one time affairs which will be accounted in upcoming quarters. So these are the quarterly result. From last 3 years, we can see that the initial sales was 230 crores, which has increased to 400 crores, 500 crores, 600 crores, and in 3 years it has more than tripled. It is 920 crores in the recent June quarter, and the operating profit was 30 crores. It has gone up to 130 crores. So being small cap in nature, it has increased sales tremendously and profit exponentially. This was the figure which I was discussing. The profit has been shown as loss just because of this acquisition, and nothing wrong with the fundamentals of the company. Friends, we can see that there is one risk in investing in this company. I'm saying both positives and negatives. The promoter shareholding has decreased. promoter shareholding was 70, it has decreased to 60, and it has become 55. But this is not a concern at all, because it is not a family owned business but institutionally managed business, and hence the big fund houses sells it and another big fund houses purchases it. Though the shareholding pattern of a promoters has decreased from 70% to 55%, we can very well see that FII has increased from 2.75 to 3.7, and 8.63 to 14 DIIs have increased. So despite promoters being selling it, the FIIs and DIIs have kept on increasing their stakes. This is a good sign. Now let us look into the technical analysis of RHI Magnesita. This is one day chart of RHI Magnesita. We can see that the present current market price of the company is more than 20-day average, 50-day average and 100-day average. So though it is a momentum stock, it is a momentum stock in a positive momentum, but current price is above all the moving average, and we can see that RSI index, it is also close to overbought zone. So considering it is a good company for long term investment, but the present market price possesses the margin of safety, I would say, is little bit less at the current level. So I have drawn the trend line. This is the Heisnik arc curve. We can see that this share is continuously in momentum stock. It is upward trend with minor correction, upward with minor correction, upward trend with minor correction, and here it has taken a W pattern and it is on rise. And I have drawn trend line with support and resistance. So we can very well see here the stock is much above the support line. It is not on support, but it is bound between it is following this trend pattern, and RSI is close to 60. This is a weekly chart. So I would better suggest that the correction, the present price is 11% from the 11% at discount from the all-time high. So friends, if it was more than 20% or 20 to 25%, that is the right time to buy a stock, and we can see that there is a good support at this price at 600. So between 600 and 650, this range would be the range of buying or accumulation. So we can wait for correction of another 5 to 10 to 10%. If it is between 600 to 650, then this is the good buying range for this price. As I already discussed, the fundamentals, the moat of the company, the fundamentals, the quarterly results, as well as the technical aspects, according to me, this is not the right time to buy the company. We can wait for the next quarterly result, because recent acquisition has done. You can see the performance, and then if there is a correction of more than 10%, it is a good bet for long term investment. Thank you.